Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is the Kickstart video for January 2024. In the Kickstart video, I take a look at three of the major currency pairs to kickstart your trading day in the U.S. session. Those pairs are the Euro versus U.S. dollar, dollar versus yen, sterling versus U.S. dollar from a technical perspective. So let's get started. Before we start, prayers for the people in California as the devastating wildfires take root overnight with winds, gusts of over near 100 miles an hour. Pray for those people and that for their safety. In the markets today, following yesterday's sharp declines in U.S. equities, led by the NASDAQ index, we are seeing a continuation of that move. The last few hours have seen the U.S. yields move higher, with the 10-year now up 3.7 basis points. The U.S. Stock indices are lower, with the S&P index now down about 18 points and the NASDAQ index down about another 88 points in trading here today. So there's a continuation seen in those markets from the sharp declines yesterday. Yesterday, the NASDAQ index fell minus 375 points and the S&P index fell minus 66.35 points. The dollar yesterday saw the dollar move higher off of the higher yields, and that trend is continuing here today. The move to the downside yesterday came right down to our swing area and also our 100-hour moving average. That's a blue line in this chart. The swing area is defined by a number of different swing lows and swing highs before moving to the downside here. We came back above it here and then corrected down into it and a little bit below it before moving to the upside and trading yesterday. We came right down into that swing area and found support against the 100-hour moving average at the end of the day. That led to a little move to the upside here in the Asian session and early European session. But over the last few hours, we've seen a continuation to the downside, breaking below the 100-hour moving average, breaking below of this swing area, and that increased the bearish bias. And as you can see, we rotated all the way down to this swing low right here before the move to the upside here. That level came in at 1.0272. And that's about where the low came in trading here today. We are up to 1.0285 currently at the moment. But the bias obviously remains more to the downside. Taking a look at the daily chart in this currency pair. The daily chart has also moved down to the low of this swing area. The swing area was defined by other levels going back in time. We did move below that area in trading in the first week of the year, but the momentum could reverse and push the price higher. I'm talking about this move right through here, but we're right into that area between 1.0273. So there's lots of there's support down here that seems to be giving the traders cause for pause. We'll see if that momentum can continue on a break of the 1.0272 level. Be aware of that level. If we do correct higher. However, we could see, could we get all the way up to this level right here? It seems unlikely, but that would be the target for dip buyers who are leaning against this 72 level. The potential could be that the low is in place against that level off the daily chart, off the hourly chart, and we see a rotation back to the upside toward the 100-hour moving average. This would be a tough nut to crack. However, as it was a key floor through here, then became resistance through here, and then came down to support here. But it did it before, so it could do it again if it gets the right momentum going. So be aware of this area up here near the 1.03339 level. Let's take a look at the dollar versus yen next. Off the hourly chart, we are extending to a new high. That high is trading above the previous highs that we saw in trading yesterday. Two highs, as a matter of fact, 158.40. Those highs were as a result of breaking outside of this ceiling area right through here. I put it in yellow, where we had a number of different swing highs going back in recent time, the last few weeks of trading. You can see the number of different highs that came into this yellow area right through here before the break to the upside yesterday, failure, break to the upside yesterday, failure. And now we are using that level as a support. Okay, so that makes sense. 157.91 is the risk level on the downside. If the price were to go back below that level, we could see further probing down toward the 100 and 200-hour moving average. Yesterday, the price did bottom against those moving averages right here, giving the bulls the go-ahead. But this is close resistance now after the break to new highs. As long as the price can remain above this level, the bias remains firmly in control of the buyers in the dollar versus yen. If we move below that level, we still have work to do with the 100 and 200 hour moving averages down here to get to and through on the downside. So it's not all green grass and high tides for the buyers, but it would give the buyers some cause for pause, give the sellers perhaps some confidence that maybe we can get back below the 100 and 200 after failing on the break to the upside and trading here today. Before I go on to this sterling versus yen, let's take a look at the daily chart of the dollar versus yen. And the next key target I have earmarked as this high right here. This swing high came in at 158.86. Get above that level opens the door for this swing high right through here, which comes in at 159.44. These are big steps, and then this high right here at 162.09. So be aware of those levels. And finally, let's take a look at the sterling versus US dollar. We'll start by taking a look at the hourly chart. What a big move to the downside in trading here over the last few hours. Just got the momentum going after breaking below the 100-hour moving average right here, and also this swing area right through here. Yesterday, the low price came in just ahead of that 100-hour moving average and just near the low of that swing area. So that modest rise in the Asian session, but stayed below the 200-hour moving average. And then when we broke below these levels, it was Katie bar the door, and the price moved sharply to the downside, taking out the low price that we saw in at the beginning of the year at 1.23515, moving down to a low of 1.23243 before seeing a bounce back to the upside above that old high. We have since moved back to the downside here with the rise in yields that currently trade at 1.23347. Let's look at the daily chart to see what it is telling us. And this move to the downside has traders looking toward the 123 level. 122.986 is this low price, as a matter of fact, just below the 123 level. So that's going to be a key target on the downside for the sterling versus US dollar. For break below that level, we'll look toward the 38.2% retracement of this move to the upside. This is the 2022 low to the 2024 high. 38.2 comes in at 1.22524. That's certainly something that could be targeted here for the sterling versus US dollar if the dollar continues its race to the upside that we've seen to start off the new trading year. So there you have it, a look at the three major currency pairs that kickstart your trading day. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.